So I thought I should get them all together and just thought I should start the day with an icebreaker activity. So I did some kind of it was like one of those things where there's a problem to solve and you work in groups to solve the problem or whatever. I put it down on the table and literally the owner just stood up and just walked out. He was just like, this is just a complete waste of my time. I'm out of here. He just stormed out downstairs down to the warehouse and started building stuff.
All right, Pete, welcome. So just to introduce you, Pete, you're an entrepreneur through acquisition, investor, business operator, coach, and mentor. You're focused on helping aspiring owners find, acquire, grow, and successfully exit small to medium enterprises in Australia and the broader Asia Pacific region. You're widely regarded as one of Australia's most active ETA and search fund investors, with hands-on acquisition experience as both an operator and investor. So welcome to the DNA of an Entrepreneur podcast.
Yeah, thanks for having me. I appreciate it. It was good to get here. It's a bit wet outside. I appreciate the coffee as well.
You're welcome. No problems at all. So Pete, for those who don't know you or are watching this content for the first time and sort of hearing about you, do you want to just share a little bit of background about who you are?
Sure. So I don't know whether to do the short, medium, or long. I grew up on the beaches of northern beaches of Sydney.
Mm-hmm.
I went to the local public school. Had a relatively, I guess, for that area, normal upbringing. Yep. After school, I went to university. I studied civil engineering, majoring in structural. I added a finance degree, and then relatively early on, I started work whilst at uni in parallel as a design engineer. I spent some years as a design engineer and then moved into construction project management. I think my move from design engineering through to project management was because I was more interested in the challenge of people than the challenge of structures.
Mm-hmm.
And even to this day, I still don't think I've worked out people. So I did that for a few years, and then I had a finance degree that I wanted to put to the test. So I spent, at the time in the early to mid 2000s, Macquarie Bank was the place to be if you wanted to kind of test whether or not you had what it took to be in the finance game. So I applied and was successful and spent some years in the Sydney office and also in the London office, learning a whole bunch of stuff. And then 2009 moved home and got a job with Stockland in their group strategy and risk area, and then moved on to their commercial property area. So that kind of chunk of my career, whilst it had quite a few chapters to it, was a relatively normal corporate career, I guess you'd say, for someone with an engineering degree and a finance qualification, to make their way through, corporate Australia. And I guess I got to 2012 and realized that I could see the path ahead of me for, in that corporate world. And it wasn't, I was saying to someone the other day, it didn't quite scratch the itch that I had. I was asked for something a little bit more, with a little bit more autonomy, but also more accountability. So I wanted it to hurt if I fell over, but I wanted to know the impact of the decisions I was making if things were going well.
Yeah.
So didn't have any great ideas. So, the first idea that would have come to my head would have been, well, I should go out and start a business, but I didn't have any great ideas. So I went out with a mate of mine, and we're at a similar stage and had similar thinking around what we wanted to do with the rest of our lives, and we went out and bought our first business. And so then we can get into I can follow your lead on questions of where you want to take the next bit, but basically spent kind of, 6 or 7 years buying and operating businesses for ourselves. And then in 2019, 2020, came across the concept of investing in other entrepreneurs doing the same thing, and have really lent into that over the last 6 years. Nice. As an ETA investor.
Great. Love it. So, let's sort of go back to sort of the corporate career bit, because I think that will resonate with a lot of young Australian professionals who, in Australia, I guess we tend to really value education quite heavily. A lot of people do go to uni, and if you don't go to uni, you might be doing an apprenticeship for a trade or anything like that. But like, what was going on through your mind, like in that corporate career, that maybe was a bit unfulfilling? Because I feel like a lot of prospective entrepreneurs that I talk to, especially who are considering the ETA path, are very unfulfilled in their careers, but still actually think their potential is much greater than what they're using in their day-to-day job.
Yeah. So for me, I think at the time, there's probably one part of me that was getting frustrated that I could see there were things that we could do that I was recommending that we do that was just required these layers of bureaucracy to agree to before we could make any moves. So in terms of actually taking progressive steps forward or trying new things, that was becoming hard. Now, that said, I feel like I got pretty good at navigating corporate beasts. I worked at Macquarie for a few years and managed to find my way into the various positions that I was after. I did the same at Stockland. So I don't think that I was not finding the right pathways within those corporates to make things happen. Often I was the special projects guy because I could get stuff done. But I think that even when I found those pathways, they were a little bit frustratingly slow to get things happening. I think a lot of those corporates, particularly Stockland when I was there, a lot of the supply chain was made up of small business and small business owners, right? Whether it be the cleaning companies that we were contracting or the companies that we were buying some products or things like, so I was responsible for the commercial property portfolio, the operations part of that. So making sure that the shopping centres and office towers were operating properly. So we had to buy a lot of stuff and procure a lot of services. So I was meeting with a lot of small business owners and seeing what they were building and what they were driving, and that was quite inspirational. I also feel like, and I wonder whether this is something that other people mid-career or even early career, but maybe mid-career as well in corporates notice, is that when things go wrong or people screw up, it actually doesn't hurt that much. The person that screwed up is still there. They probably still got half or even all their bonus.
100%.
They might have even got the next promotion. You didn't really even see their screw up make its way through the financials because the flywheel of some of these organizations is so strong that like people are tripping up and all sorts of stuff all over the place and it's not making any difference.
Yeah.
Or people have got great ideas and are doing great things, and equally that's not making any difference. So like the volatility left and right of the curve is relatively low, and it's just because there's such large beasts with big flywheels. And I wanted to feel as though the things that I was doing was having an impact, positive or negative. Like if I screwed something up, I was very happy for it to hurt. I mean, in my free time, I love big mountain skiing and mountain biking and sailing and all these kinds of things where you can get hurt. So maybe it's just a part of me that doesn't mind being in environments where I can get hurt. But I feel like I wanted a bit more of that energy and excitement. I often use the analogy of sailing when I describe the differences between different sized businesses. And these large corporates are like big maxi yachts with large teams. Everyone has a very specific role. There's usually redundancy in that role. And if you do really, really well or really, really badly, it usually gets masked by the momentum of the boat and the other people on the team. If you're on a 16-foot skiff and there's three of you, if you shift your weight 20 centimeters to the left, it'll make a difference. If you pull the wrong sheet at the wrong time, like the boat will capsize.
100%.
And I think I was just looking for that kind of environment.
So you sort of get to this point at 2012. You've made a decision that you're going to go out. How old are you roughly at that age? At that point,
34.
Okay, cool.
Just turned just turned 34.
Okay. So you've had sort of like at least a 12-year corporate career by that
Well,
point.
I kind of, as I was saying, I started working as a junior design engineer in 97.
Yeah.
So pretty much straight out of school and did university in parallel. So, by that point, kind of 15 to 16 years.
Okay, cool. Yeah, really cool. And then when you sort of started searching, was it this idea of ETA that came across from the sort of the search fund concepts from America, or it was just stumbling across the concept?
No idea.
Yeah.
So no idea of the terminology, of the fact that other people in other markets were doing it. I mean, I often say, ever since businesses have existed, the East India Company in the UK back in whenever that was, people have been buying and selling businesses. So the concept of doing that is nothing new. The idea that there is a common terminology and a community around it is what's relatively new here in Australia and APAC. It's something that's been around in North America since the 80s, in Europe probably for the last 10 to 15 years. It's similar to kind of the startup VC landscape, which obviously people have been starting businesses since businesses began. That's nothing new. But the idea of there being a community around it, for example, in Australia, is probably still only 10 to 15 years old. So for the ETA space, we're now 5 years in to that journey, whereas in other markets, they're 10, 20, 30 or even 40 years into it.
Yeah.
So back in 2012, nothing like that. I mean, I think me and my mate, who met through mutual friends when we were both working in London, back in 2006, had always joked about, we should go and do something ourselves instead of doing it for all these other people. Yeah, we should go and buy a business. And I think that conversation just kept coming up. And then I think during 2012, we were both at a similar point looking at, the next 10 years of our career in our respective professions and thinking, we could do that. Like we can see exactly what that looks like because we can see all the people in front of us that are doing exactly the things that we would do to plot that path.
Yeah.
But maybe that's not what we want to do. And then we just kind of said, well, maybe we should buy a business. Maybe, we've got a little bit of money. We have bought much bigger businesses for other people before. We probably know how to do that. He had a kind of financial and accounting background. I had kind of operations engineering background. That was a good fit for us. So I think we just agreed that we'd have a crack, and we just started small. We didn't. It wasn't like this sudden moment where we said, "Yeah, this is what we're going to do." We said, "Well, let's start." So like every Sunday, like we live nearby, every Sunday night we'll get together, have a drink, and during the week, you have to gather 5 ideas for businesses you're going to buy and pitch them to the other person. We just started doing that.
Yeah.
And then before we knew it, we had this massive pipeline. We said, wow, that was easier than we thought to find stuff. So then we just started putting in some offers and see what happened. So,
and like finding those businesses back in 2012, like, I mean, for me, I'm on Seek Business every day, scouring the internet. Where were you looking for those back then?
I can't remember. Did Seek Business exist?
I can't remember either.
It was definitely online brokers.
Yeah.
And occasionally they weren't even online. Like they would advertise themselves as brokers and then you'd have to call them up. I mean, I remember because, we had come from, and I hate using these kind of phrases, but kind of the big end of town.
Yeah.
We had this kind of concept of, if you're out there either on the sell side or the buy side looking to do a transaction, you build a relationship with the corporate advisors in that space. So like the corporate advisors in this space were like small business brokers.
Yeah.
So like we were doing things like taking these guys to lunch and like having drinks and like we would at, in town. They must have thought we were crazy because I don't know if any of their other kind of potential buyers were doing the same thing. But I mean, that didn't last for too long because we suddenly realized that they weren't really that proactive in bringing stuff to us. Like occasionally we would have met up with a broker a month before and it outlined exactly what our plans were, what we were looking for, all that sort of stuff. And then like a month later, we'd find something perfect on their website and call them up and say, like, this one's perfect. Like, why didn't you call us? And they're like, oh, yeah, that one could be good for you. We're like, okay,
Wow.
clearly we'll just go online.
Yeah.
But yeah, that was about it. I mean, we weren't, some of the searchers and entrepreneurs that I work with now, everyone's got their own method, which I think is great. It just suits their own appetite and their own style, right? So some people just go by broker, some people go very targeted outreach, others do like a big kind of broad multi-channel outreach strategy. I mean, some of these guys are finding 2,000 businesses a month, right? And doing like, hundreds of calls a week. We were nowhere near that. We maybe like hit on, 200 companies that we thought might be good. We probably read in any detail 50 IMs.
Yeah.
We probably spoke to 20, put in 5 offers and bought 1.
Wow. That's cool.
So it's probably that kind of ratio.
Yeah. And I mean, we can kind of get into the specifics of the sort of businesses you've bought. I know the first one was kind of in the mining sector, in probably like a device or in the mining
instruments.
Measurement instruments. Yeah.
Yep.
Can I ask, did that have anything to do with your engineering background at all that attracted you to that?
Probably. I mean, all of the businesses that we were looking for were technical in nature. Like we had a transformer business that worked mainly with the Australian rail organisations, a secure key cabinet business, which actually we did end up buying, one of those first 5 offers that then took 2 years to complete. So they all had a technical angle. Like, so some of the things that we would speak about in terms of characteristics were things like, all the boring stuff like no customer concentration and no product concentration and, relatively stable earnings profile and good cash conversion. And like, so that's all relatively benign. We're also looking for things like, we knew that when we were going to buy something small, particularly if you're in a technical product or service, it's highly likely you're going to be some part of a supply chain. And we didn't want to be really long way down the supply chain. We didn't want to be the subby to the subby to the subby, blah, 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 all the way to the person that's actually using the thing that we're selling. So one of the attributes that we were looking for was as simple as the purchase orders that this company was receiving. We wanted blue chip customers issuing those purchase orders. So for example, SRO Technology, which is business we still own to this day, it sells its products directly to the major mining companies. It's not 5 layers down in the supply chain.
Yeah.
And I think that is a demonstration that it is particularly important to. It's playing an important role in the ecosystem for that end user, and I think that gave us some comfort. I think our confidence to buy a business like that, particularly so subscale. I mean, there was 5 employees, of which 2 were the husband and wife who were retiring, right? Like so yes, I did go in there as CEO of a company of 3. It was 4, including me. But I think some of the confidence of doing that was the fact that when I dropped in to do that, I had an engineering degree. I started a mechanical engineer, but I ended up a civil engineer with structures. So I didn't finish the mechanical engineering degree, which probably would have been closer to an instrumentation type of outcome. But I could understand the product. When we're talking about the technical details related to product, I knew enough to be dangerous, and that probably made me more comfortable going into that space. Probably, as we sit here today, I'd be more comfortable going into something that I'm less familiar with because I'm more comfortable with the business side of things to know how to navigate that. But in that moment, I mean, in the first 12 months, I was on sites lifting weights, test weights, following technicians around, driving utes, issuing quotes, stacking stuff in the warehouse, driving forklifts. So like it had to be something that I was comfortable doing.
Yeah. It's funny. There's a lot to unpack there. I mean, like it's a lot more glamorous from the outside than what it is in reality when you step in, especially coming, as you said, from the high end of town. Going down to stacking pallets or shelves in a warehouse, driving probably in outback Australia mining sites or whatever. Compared to an air-conditioned office in the Sydney CBD.
Well, also, I mean, it's funny. I was going back through some old kind of interviews that I did over the last couple of weeks to pull out some stuff, and one of the things I was talking to someone about was, literally, it was almost, there was a little bit of a window in between, finishing up where I was at Stockland and starting sort of in the seat. In the third-hand chair at the student desk in the corner of the 50 square metre semi-industrial site in Miranda. You instead of, catching the train or driving into the city and, walking across town, picking up your coffee, going up 45 floors and speaking to your PA about what your calendar looks like and, having a few meetings and whatever. You're driving 45 minutes to South Sydney into a light industrial area to park your car next to 3 utes and walk inside, pull up the roller and work out how many pallets you need to move from that rack to that rack the day. Because if you don't, you won't be able to receive the product that needs to be worked on and then shipped out the next day to make the $15,000 order that needs to be done, right? So and suddenly all those little things make a big difference. I mean, I still remember the first month of trading, we did $138,000 worth of revenue that month, and it just blew my mind. I was like, oh my God, it's like $138,000 in 1 month. Little did I know that all just went straight back out again. The next, it's one of the funny kind of things around, you very quickly learn about, working capital cycles and all that kind of stuff. But I still remember, you need to have the mindset of getting excited about something that might otherwise seem really small, like 6 months earlier negotiating, a $35 million security contract for, a commercial property portfolio or something. But then, I still remember there was a Friday, I was driving between Sydney and Newcastle to go and visit a mine site up in the Hunter, and I was sitting alongside one of the technicians, and they said, you just got a call from one of the customers, and they got our quote for it was a $12,000 instrument. I can't remember what it was. And they said, no, they've decided to go with the other guy. And I was like, no, this is not happening. So I called up the customer. I was like, I heard you decided that you're going somewhere else. Just wanted to learn about why. Spent 15 minutes on the phone to him and managed to get the order. And it was like one of the best orders of it was $12,000. Yeah. You just, it goes back to that analogy of the boat, right? Like, you could secure a massive contract for a big company in a corporate role, and it would, I definitely don't want to downplay the importance of those roles and those achievements.
Yeah.
But it's a different feeling to then actually being on the 16-foot skiff and happening to, pull the sheet at exactly the right time so that you make that tack, and it has a huge difference. So yeah.
No, and I think that speaks to the wiring of a person, because as you said, reality is the world turns with having people who just want to clock in, clock out, climb the corporate ladder, do their role. It's kind of how you grow a small business anyways, is you hire people who are workers and are really happy to...
And from my perspective, I had a great 15 years doing exactly that. Yeah. So I definitely, I think that a lot of what I speak to, entrepreneurs and also people in corporate life about is that most of it is self-awareness. So it's not like this path is better than that path, better than that path or whatever. It's actually like, what's the best fit for me? Versus what's best fit for some other person.
Yeah.
And having that self-awareness is really, really important. And there are some people that try this path and it doesn't work. It doesn't mean that they're a failure or incapable. It just means it's not the right fit.
Yeah.
It's like, can't remember the exact saying, someone can look it up, but how they talk about you shouldn't judge a fish by how well it can climb a tree or whatever. It's the same thing. You've got to find your thing. And a lot of what I speak about in terms of ETA, and the reason why I'm so excited about it for this market, where it's relatively new, is something with a common language and a common pathway, is that I think that there is a subset of people that are currently sitting in, let's call it relatively traditional, or even not even, in other career paths, for whom this might be a good fit, but they can't put a name to it. And we can actually take them from something that they're doing well at into something that they might really excel at. Yeah. And that would be great.
Yeah. And I mean, I think, I want to talk about that opportunity in Australia that I think is really, we've skimmed the surface of it in that sort of small business sector, particularly with the age the baby boomers are at now. But going back to, the first business you've acquired, what sort of talk through the first 30, 90, 180 days, and what does that look like? Because it sounds like the owner was still around for a period there. Yeah. You're navigating, winning over maybe staff that have been there long term, maybe staff that haven't had a whip cracked on them, too often, or they've kind of been in their role and they're cruising. And then here's this sort of young hotshot coming in, wanting to get, higher output out of their time and their wages and whatever. So talk through what that experience is like. And even if you want to feed in any other acquisitions you made that had some good stories to sort of share around that.
Yeah, so I definitely, the first, I don't know, it was 90 days. The first 6 months was pretty formative for me even to this day. I was speaking to a new CEO who has just taken that seat 2 weeks ago.
Okay.
And we were talking about, how quickly you move to change things, how long it takes to learn, how do you find who's who in the zoo in the organisation. And I think there's no doubt that first kind of 6 or 12 months at SRO back in 2013 is still informing my understanding of that. And it was the most tactile exposure I had to that through all this time. It was funny. I mean, call it mid-30s. I probably would have called myself early 30s at the time, 34, right? So is that mid? That's
early.
Early, yeah. I have no doubt that I still carried a bit of that ego from my 20s into my 30s. There are plenty of people that have known me since my teens who could tell that story of my evolution quite well, no doubt. I have no doubt that that arrogance and that ego would have impacted my ability to engage well with the team in that first 6 months. I think I was, from my perspective, consciously trying to engage in a proactive way, but it would have been impossible for there not to be, the remnants of that coming through. And so I think it's really important for people who are just stepping into the seat. You don't want to be constantly looking over your shoulder and questioning the way in which you're behaving and acting. That just ends up being anxiety producing.
For sure.
But I think it's important to recognize that if you've come from a very different environment into this environment, you got to remember that now you're swimming in a new pond, right? So just watch keenly first. A couple of things that kind of stood out to me is it might have been in the first 3 months. I wanted to pull together the team. I don't know if I called it this. I hope I didn't, but I probably did. For a strategy day. I probably did call it a strategy day. Anyway, what an idiot.
Yeah.
Anyway, so I wanted to pull the team together for a workshop to talk about what we want to do with the business, right? I thought that'd be a great way of engaging the team.
Yeah.
So if you can picture it, it's like a room maybe as big as the room that we're in now, but probably not.
Yeah.
Right? So for people listening, the room that we were sitting in back in 2013 was probably like 3 by 3 or something like that. And and in there would have been me, the lady that kind of ran the office, the husband and wife who were selling the business, and 3 service technicians.
Yeah.
One was probably in his 40s at the time, the other in his 30s, and the other was a junior apprentice in his early 20s.
Mm.
And so I thought I should get them all together and just so I can learn a bit about what they're doing and think about what they're thinking about for the next 12 months and, do that kind of stuff. But I thought I should start the day with an icebreaker activity. So I did some kind of it was like one of those things where there's a problem to solve and you work in groups to solve the problem or whatever. I put it down on the table and literally the owner just stood up and just walked out. He was just like, this is just a complete waste of my time. I'm out of here. He just stormed out downstairs down to the warehouse and started building stuff.
Oh, wow.
There's a bit of me that thinks he was a cranky old cow and he should have just, pulled his head in and thought, oh, you poor young guy, you don't know what you're doing. Let me help you. He could have leant in and helped me. But equally, there's a bit of me that kind of understands. If I was to now be a fly on the wall and watch myself do that, I would have been slapping my face, I think. So I think it's not that what I was trying to do layers deeper was not the right thing to do. I was trying to learn a bit more about who they were and what the business was and what ideas they had, and then I was trying to engage them in the thought process around what we want to do in the next 12 months. So if you write it down on paper, you go, well, yeah, it sounds like a good idea. Pull the team together and whatever, right? But application is everything. That was just completely the wrong execution of that idea.
Yeah.
And so I think that over multiple iterations of that, in 2015, we bought 3 more businesses. In 2017, we bought another business. And since kind of 2020, I've ridden shotgun with kind of more than 20 entrepreneurs and acquisitions, probably 12 to 15 acquisitions. I think my pattern recognition of how to achieve that insight and get that alignment over a 12-month period with a new team has gotten better.
Yeah.
Nothing's ever perfect. Like I said at the beginning, I'm still learning people. But yeah, it was pretty direct, definitely. And hopefully I took that slap in the face as a lesson learned. I think I did. But yeah, I mean, there's all sorts of funny things that they do, right? So that owner had a big old timber desk that sat in the corner of his office, right? And then the day after we completed, I think, on a Friday, and then I came in on the Monday or whatever. He didn't leave the desk. He came into work, that was his desk. They set up this tiny 600 by 900 IKEA student desk in the corner with some crappy old chair from the warehouse downstairs, and it's Pete, that's where you can sit. So I think I sat there for 3 months until he went on some holiday and kind of really didn't meaningfully return after that. But yeah, it definitely, as you're going through those processes and then you're turning up to barbecues on the weekend with what is your existing network of people that are all still working in ASX top 200 companies. What did you do this week? I did this, I did this, I did. And then, well, what did you do this week, Pete? Well, the back corner of the warehouse was a bit dirty, so I had to get the broom out.
I love it.
But I think it's a bit that's the reason you do it. Another analogy I use a lot is you don't climb the mountain because you like the view from the top. You climb it because you like the challenge on the way up. I doubt you would speak to many mountain climbers that actually hate the journey and all they want to do is stand at the summit and look at the view. Like when they're halfway up and, they're something goes wrong with their shoe, or like their backpack strap breaks, or, they can't, the path they were going on comes to a dead end, they have to turn around and go back and find another way, or it starts raining or snowing, or I would say they actually kind of secretly like that.
Yeah, 100%.
Because that's what makes the whole journey more enjoyable. So there's a bit of that in it. Like you don't wish peril on yourself as a business owner, but I think the reason why you've chosen that path is because you kind of enjoy the satisfaction of solving those problems.
100%. And I think that speaks to what I was saying earlier, or what I asked you earlier about being in that corporate role, maybe thinking there's more potential in that. I think it's finding a purpose that you're going after and knowing that you're capable of more, but knowing that you're not quite there yet. So it's actually the pursuit of who you have to become to get to that level, and then continue to grow, whether it be that organization, acquiring more organizations. But I think that's almost an essential characteristic that I think, and especially an entrepreneur through acquisition, but most entrepreneurs to some degree, this idea that there's not going to be that day where you say, I made it.
I did it, yeah.
Yeah, it's really the pursuit and the challenges and who you have to grow to be to run an organization like that.
Yeah, I feel like even at the point before I bought my first business, if you were to look at my CV, you would have seen that something was not quite right. Like, a lot of people say, oh, that guy jumped around a bit if people are moving every 3 years. I mean, I was kind of moving every 3 or 4 years.
Yeah.
And often when I was in a role, I actually didn't really do the thing that they employed me to do. Like often they'd employ me to do this, and I'd kind of do that. And I think I did it relatively well, but often around the core thing I was employed to do, I was just doing all sorts of other stuff because I was trying to find ways of like exploring other opportunities. In every single role that I did, I was doing it. When I was a trainee design engineer, back in the late 90s, I was also like pitching to the board of that small engineering firm about what their marketing strategy should be. Like, what right did I have? It was probably just because I'd just done marketing in my business degree and thought I should, like, they probably, I don't know what they were thinking at the time. They didn't sack me. So, but I think that was a lead indicator that I was always looking for something else.
Yeah.
And even if I think about the last 15 years, like each 5 years, I've then moved on to what is the next thing I need to learn. So like I spent roughly 5 years buying an operating business myself. I then, a little bit after that moved into like backing other entrepreneurs to do the same thing. So I said, okay, I know how to drive the ship. Do you reckon I can help someone else to drive the ship? And then after that, I was like, okay, well, now I need to learn how to be a non-executive director on a board. So like I've spent kind of the last 5 years doing that, learning how can I not have my hand on the wheel, but still add value. And that's a really tough job. And I'd say I'm still learning how to do that. But then beyond that, like I kind of see the next kind of 5 years for me is how do I help other people become non-executive directors, right? Like, is there a way that I can sit shotgun to the non-exec director and help them help the entrepreneur? Like, so I think I'm always looking for ways to put myself into the next form of challenge to then continue learning. So I think you're right. Like, there's an ongoing learning process and kind of never being satisfied that you've kind of quote unquote made it.
Yeah, I jokingly say that my father has a curse that it sounds like you and I have, is that retirement will probably kill us, and that if there's not a chase or pursuit of something that we're trying to grow or evolve into, then we might struggle to find purpose in life in general.
Yeah. I don't think. I mean, I think I'm hoping that some of the pathway I've picked with the things that I've done over the last however many years has created the opportunity for me to kind of never retire. Like I don't actually think I'll get to a point where I want to kind of lay down the tools. I just want to keep finding new tools to learn.
Yeah. Okay, so let's pick up from there. So you've those sort of first 5 businesses you've acquired, or that sort of 5-year period that you spent acquiring businesses, sounds like there was some great wins and success, and maybe there was some failures and some challenges.
Yep.
Can you share a little bit about what the big wins were and where the failures lay?
Yeah. So we bought 5 in that period,
which is a lot.
So yeah, 2015 was a big year. Like, we bought 3 businesses in that year.
Wow.
And that was opportunistic, because the 3 that we bought in that year were 3 completely independent platforms. It's not like we had a platform and then we're like, okay, there's a roll up here, let's go aggressive and buy 3. It was just that over the years preceding that, we'd been planting a whole bunch of seeds, and then they came to fruition in the same year. So yeah, I mean, we had SRO Technology, which we still own today. It's a little bit bigger than 5 people now, which is good. And we do have strategy days. If any of the guys in the team listen to that, they're going to pay me out at our next quarterly. Maybe I should run an icebreaker at our next quarterly and see if anyone walks out.
That's right.
So we still have SRO Technology. In 2015, we bought CIC, which is a secure key cabinet business. We bought Duncan Solutions, which does the on-street parking meters. If you live in Sydney, you probably would have used them. And we bought a wholesale travel business called CRT Holidays. And then in 2018, we bought Petronic, which is a dust monitoring business that we bolted on into SRO. So I'd say we had like a spectrum of outcomes for all of those acquisitions, right? So SRO has succeeded really well in its organic growth profile and continues to grow now. A couple of years ago, we bought a global products brand called Ramsey, which is now growing really nicely, and will build out kind of the global footprint for that business.
Cool.
In 2018, we sold a majority stake of Duncan to a local private equity firm. We still own a small portion of that, but that's being run predominantly by that firm now, and so that crystallized a portion of our investment in that with a good outcome for us in that regard. The wholesale travel business was one of the ones where I'm pleased to say we kept our shirt. But if you're the lesson that one I think taught us was you can't fight a market that's working heavily against you, regardless of how good you think you can make your business. At the time, hotel beds, Airbnb, Hello World, all these guys were going through quite a growth spurt. We bought a business with significant relationships in Italy with kind of product owners, meaning hotels and various other locations throughout Italy, that we thought was going to be kind of our moat against the online wholesale kind of challenge. But it didn't work that way.
Okay.
So we exited to an adjacent business that was kind of selling product in another European market, and managed to get out without making a loss, which was nice.
Amazing.
But it definitely didn't go up.
You exited that business what year?
Like 2019?
The probe was more getting out before COVID.
Yeah. Yes. No, it was before COVID. It wasn't COVID related. The struggle there. The struggle there was actually just the boom of all of the online direct to retail wholesaling.
Yeah, which probably is a blessing in disguise to some degree, because it would have been because
then it would have been really hard. In COVID. So yeah, I think also. I don't like to say that you need to be hugely proficient in the underlying product or service that your business provides. But we were a long way from knowing how that business ran, I think, as well.
Yeah.
Like I'm invested at the moment. I sit on the board of a cybersecurity business in New Zealand. like I struggle to spell cyber, right? Like it's a very complex area.
100%.
The value that I feel that I'm adding on the board at that business is kind of understanding the way in which businesses should operate, the way in which they should think about their customer, and the way in which they should think about where they deploy their capital. But there's a lot of technical detail in there that you really need to be close to the wire on to properly understand. So it's not necessary. The thing that I think you need to have a good understanding of is who your customer is and why they're using your product and service. And I feel like with the travel business, we didn't understand that as well as what we should have in order to assess the headwinds that we ended up facing.
Yeah. No, cool. That sort of speaks to the idea of like a searcher who's looking to buy. We've already sort of spoken to the nature of the operators. I mean, it's no surprise that like 50% of our country's wealth sort of sits with baby boomers, and many of those have delayed retirement because of COVID and various other reasons, like living longer, fitter, healthier. Have decided to continue to operate into their 70s and 80s at times.
Yeah.
And so there's even, I guess, challenges in the transaction process of, there's generational gap. I mean, you sort of spoke to your strategy meeting, but that can be really challenging, especially coming from a commercial background where you sit in rooms with people that are very commercially trained. They know how to behave and operate and how to speak to each other respectfully and these sort of things. And then you, to some degree, are dealing with a vendor who's built a really successful business, recurring revenue over 25, 30, 40 years, but has never really had to...
Absolutely. This will be the only business they ever sell.
Yeah.
And they've never sold one before.
Yeah.
So like one and done.
Yeah.
Like zero experience and zero appetite for learning how to do it well because they'll never have to do it again.
Yeah.
So like problem on both sides of the equation. Like in one sense, if you've got someone that's doing it for the first time and then they want to do it 10 times more, they'll be really thoughtful about the first time because they want to make the next 9 work.
Yeah.
Whereas this person, they've never done it before and they know they're never going to do it again.
Yeah.
So like it's understandable as to why they couldn't care less about what you think the process should be. They're like, I've got this business. You want it. Like, talk to me.
Yeah. Yeah.
Like, if you come and say, well, 15 other transactions have been done in this space over the last 6 years and this is what they look like, they go, I don't care.
Yeah.
This is my business.
Yeah.
This is me and this is you. Like, what are you going to do about it?
Yeah.
Like,
Yeah.
So yeah, it's like a translation process, I think. And when I say translation, I say with respect. I'm not saying like, trying to dumb things down. It's nothing to do with that. It's a translation process to make sure that on your side you understand the principles that are underwriting the transaction that you're trying to execute. But you might have to then either explain those principles in another way that resonate with the person that you're communicating with, or understand the boundary conditions of your principles so that you know what requests of theirs you can accept and which ones you absolutely can't. Because if you really understand those boundary conditions, you can very quickly navigate a rejection from them because you can quickly translate what it means for you and go, yeah, that's fine. Oh, by the way, I want to keep the vehicle that's in my name that happens to be like paid for by the company.
Yeah.
Blah, blah, blah. Yeah, no problem. On first pass, you'd be like, wait a second, it sits on the asset register and blah, blah, blah. Like, how am I going to think about that in terms of net debt and like impact on earnings? But if you have a really good understanding of how the whole big picture thing is put together, you get better at like working out where they've bumped up against a railing and where you actually need to have a conversation and where you can continue. And that allows you to keep your powder dry for the things that really matter. But yeah, the individual has never done it, will never do it again. And unfortunately, typically the advisors they pick, at least to begin with, have never really done it before either.
100%.
It'll be their lawyer who is a great family friend who is super capable as a family or probate or real estate conveyancing lawyer, never bought or sold a business before, and their accountant who is excellent at year end and really good at tax returns, but has never bought or sold a business before.
Yeah.
These are their trusted advisors because they've been with them forever. Often, unfortunately, you'll find that these people feel as though they need to protect their client. I love the fact that they've got that kind of passion for it. But in trying to protect them, they go on offense as the best form of defense, when what they could do is say, hey, Bob, you know, I'm a great lawyer for you and have been for the last 20 years, but you need to get Sally over here, who's actually an M&A lawyer, to come and help you because I can't do it.
Yeah.
Right?
Yeah. Not like, so I've bought now 3 businesses from a baby boomer. And what I learned from the first transaction is that, and again, I'm not trying to profile this demographic, but that when you've run a business for 20 plus years, you care about that business's legacy and reputation, even though you're selling it. It's like a child to them, and rightfully so. But I think where I've personally had success is building that trust and relationship with the vendor really early on, that there's confidence that they're leaving the business in the right hands that will, you know, potentially actually help the business's legacy. But one day they might be able to say to a grandchild, look at how far it's gone and grown. You know, I built that in the beginning. So, you know, there is that element of you kind of need to understand who you're buying from and understand, you know, how passionate or in love they are with their small business.
Yeah, and for them, every single one of them is going to have their own nuance and their own purpose for selling. Often, and again, not profiling, but let's be honest about the demographic, it'll be the husband who is in the business operating it day to day, the wife that's probably helping, but is wanting to retire and is trying to drag the husband out of there. Yeah. And so often you'll find there's a situation where there's a reluctance there to actually let go. So every single time there's an opportunity for them to point out that, you know, something about the transaction is, you know, sketchy, they'll raise the flag really. See, I told you guys. I told you that these guys were going to rip us off. I told you that whatever. But it's just their opportunity to kind of delay the inevitable further. And so I kind of get that. Like, you know, that they really like doing what they're doing. Yeah. You know, I was speaking to some guys in it's kind of not the other end of the spectrum, but an end of the spectrum. I was speaking to some guys in Singapore where kind of the ETA search fund kind of space is growing quite a lot at the moment. But the business owner demographic in Singapore is even more retirement agnostic, right? Like they like work is life and life is work for them. Like I was speaking to some of the entrepreneurs that are out there speaking to business owners, and they were saying some of the business owners turn around and say, well, if I sold you my business, then what would I do? Yeah. You know, my grandfather ran this until he died, and like so did my dad's still here, and look, he's sitting over there. like I'm going to do the same. Yeah. Like, what are you? So I think whilst in Australia we've got quite a retirement culture. Like there's a lot of, you know, in our culture, there's a lot around, oh, when you get to retirement, you can do this. And, you know, you see it on the TV and advertise, oh, you can go on this cruise and you can. So we do have that. But I think that also we've got, you know, you got to acknowledge that if someone's been doing something for 20 or 30 years, it's going to be hard for them to move on.
And going back to the point you made about the vendor, their legal or accounting representative, tell me a little bit how you found it was important to select who's supporting you from your side as well. Because personally, I've had some experience where you want to make sure your city-based firm maybe that you don't also turn up the temperature to a point where they're burning or killing the deal and it's all in the name of, oh, I don't want to deal with this suburban-based lawyer or accountant.
Yeah.
So talk me the selection process that you've made or you encourage your vendors to make.
Yeah, so absolutely. I think that, first of all, like any advisors that you pick on the particularly the legal and accounting side, there might be some other technical advisors you get involved in the deal, but on the legal accounting side, you've got to make sure that you get along. You know, you have not the same thought process, because you want some diversity of thought in there. You want them to challenge you on things. You don't want them to just drink whatever Kool-Aid you're dishing out because you really like this deal and they just agree to everything. So you want them to pull you up on stuff. The back and forward needs to be very, very pragmatic. You need to be very clear about what the vendor is trying to achieve and what you're willing to do. You need to be the one that's doing the financial and legal acrobatics to support their progress, right? Rather than expecting it to be a duel of equals. You know, like if you're two big companies supported by two big legal and accounting firms, you just send them into battle, right? And you're like, okay, here's the outcome I want. You just go in and get as close to that outcome as possible, like, you know, go and conquer, right? And then the legal and accounting battles start, and there's like this working capital argument, and there's this valuation argument, and then there's this chip and this warranty and this clause, and my clause is this, and constant like, but you can't. There obviously, I feel like there's some inefficiency to that, but it's not completely inefficient because both sides know the game and they're playing the game, and it's a fair battle. Like it's almost
the
like
deep pockets to play that game as well.
True, but it's almost like playing ping pong with your 5-year-old cousin, right? Like they're hitting the ball back and you're running around trying to keep it in play, right? You don't smash it and beat them because then they'll just cry and walk away, right? So you need to keep. Maybe that's the best way of saying it. You need to keep the ball in play, and you need to be doing the work to keep the ball in play. So you need lawyers and accountants that are doing the same thing. So on the legal side, 100%, if you put forward a comprehensive and completely rationally reasonable sale and purchase agreement with a fulsome but fair set of warranties and indemnities, the other side will spew it straight back at you, thinking that you're ridiculous and you're trying to screw them, right?
Yeah.
So you need to know how to really target what you're asking for. Same on the accounting side. Like if you deploy the full armory of a accounting firm at the data set that a small business has, it'll like fall over in the first volley of shots fired, right? Like, so you need your accountant and your financial advisor to go in there thinking carefully about what their thesis is around what they should be seeing based on what they know about the business, and then triangulating that outcome with what data they can find. Rather than if you're in a big end of town, as soon as you find a gap in the data, you go, right, chip, valuation down, this data's missing, like, right? It's almost like weakness in their armor. The weakness in the data in the small business side, like that's just par. So your competitive advantage is your ability to navigate weak data to come up with a good deal, as opposed to find holes in weak data and use it to chip. Because as soon as you chip on the back of weak data, the business owner will say, well, I've never looked at that data and look how much cash I make. So you're just an idiot if you don't know how to run this business and you just need numbers. You're just the numbers guy, right?
Yeah.
So it doesn't even work in the argument. You can't even turn around to them and say, you know, oh, your FY24 was missing, didn't reconcile with blah. They'd be like, I don't care. Like I still made $3.6 million last year. So what are you going to do about it? So long end of the story, but picking your advisors is really important.
Yeah.
Picking advisors that have done deals in this size and space with these kind of vendors is really important because they know how to not only navigate that kind of vendor, but they've worked with that vendor's kind of advisors before as well, and they won't just immediately get pissed off with them.
Yeah, yeah. any of the deals you did suffer any deal fatigue, or whether
All of them.
All of them. Yeah.
All of them. All of them.
Yeah.
Yeah, they all. None of these run to plan. None of them. I mean, we had another one just in the last couple of months where